Well, President Biden has unveiled his new budget proposal for 2023, focusing on reducing the deficit. Among the provisions in the proposal, a 20% minimum tax aimed at the richest Americans. Let's bring in White House Council of Economic Advisors member Heather Boushey, who's joining us from Washington, D.C. this morning. Heather, good to talk to you today. This tax is something that we have seen this administration hint at for some time. Walk me through the thinking here, why this is the right approach to bring down the deficit.
Well, President Biden has been committed to fiscal responsibility and certainly is committed to this in this budget. And yet we know that those at the top have not been paying their fair share. And so what this budget aims to do is to implement a minimum tax on billionaires. There was some research that we at the Council of Economic Advisors did with the Office of Management and Budget last year that showed that the Forbes top 400, they were only paying about 8% of their income in taxes over the past decade. Well, we can fix that with a minimum tax that says, hey, if you're in the top 0.01% with assets over 100 million, you're going to need to pay 20% of that income in taxes. And so in putting this in place, we really will make sure that it's a fair tax system, a more progressive system, and that those at the top are doing their part to ensure the solvency of the American budget.
Heather, it's Brian Chung here. If you do follow through on the plan here, it would cut in half the deficit from the last year of the previous administration. Apparently, that would be the largest one-year reduction in the deficit in U.S. history. Why so aggressive on this front? Is it to give the Biden administration the fiscal room to do another ambitious spending package, whether that's some reapproach to BBB in some way? I guess what is the messaging, especially ahead of that critical midterms this year?
Well, here's the thing. When the president came into office, he had an economic plan to get the economy back on track. You know, core to that was dealing with the virus and making sure that folks got those vaccines and we got schools reopened and childcare centers open so that people could get back to work. And then putting in place a series of supports through the American Rescue Plan and executing on that in order to get the economy back on track. And we have been successful. We've seen the unemployment rate come down to 3.8%. We've seen economic growth faster than it's been in 40 years. And so because of this success, there's more tax revenues. And so the deficit is lower this year. And what that shows is that when you have a plan, you execute on it, and you make sure that the economy grows, then that is a core way that we can close the deficit. And so the president's budget puts forth an agenda that's fiscally responsible and seeks to make those investments that will continue to invest in American productive capacity for years to come.
Heather, this plan is, of course, still just a proposal. You obviously need to get sign-off from Congress, and we have seen the roadblocks that come with that, specifically Senator Joe Manchin as well as Senator Kristen Sinema. When you're talking about specifically about the 20% tax on the ultra-wealthy, what indication has the White House gotten of any support from those two senators?
Well, we do know that many folks on the Hill, like the president, are concerned about fiscal responsibility, and there has been a lot of attention focused on making sure that our tax system is fair. And the president has been very clear that we're not going to raise taxes on the backs of folks making less than $400,000 a year. So he remains optimistic that we can get something through Congress. And, you know, as the president likes to say, show me your budget and I'll show you my values. And this is the president sort of saying to the American people, this is what he thinks our tax structure should look like.
Heather, one other way that it's been kind of shown through the budget that you want to address kind of some of the higher income makers, kind of those entrepreneurs making a lot of money, is by perhaps a limitation on the amount of stock buybacks that these large wealthy executives can execute on. Can you tell us a little bit more about that? Why is that a priority? We know that it's been difficult for Congress to agree on ways to limit capital gains and other sorts of the like at the top.
Well, one of the things that's incredibly important for our economy is that we see reinvestment of capital in productive capacity, that when times are good, that those profits are plowed into innovation and R&D and investment, so that we can keep the economy moving forward. But what we've been seeing too often is that in very good times, those gains go out as income to those at the very, very top of the income distribution. Most shareholders in America are in the very top. And then as a result, we're not seeing the kind of of investment that we need to see. So one of the things that we can do to really keep the economy back on track is through something like prohibiting, limiting stock buybacks, making sure that this isn't just a way for those at the very top of a corporation to get rich quick, but that we're making sure that they are good stewards of their businesses and are investing in the American economy.
And finally, as we look ahead here, obviously to the broader economic picture, concerns about inflation. We're talking today about a pullback in energy, but obviously we've seen a big spike over the last several weeks. Give me your sense of what that looks like over the next several months and where you see inflation heading by year end.
Well, inflation is and remains a primary concern of the president and his economic team. It's something we think about each and every day. And the president has taken significant steps to reduce prices. For example, working with our allies recently to allow oil to flow from the Strategic Petroleum Reserve to hope to lower gas prices at the pumps for consumers. The president is also focused on making sure that those supply chains could come unstuck, so that goods could get to shelves, and we've seen that reflected in retail sales. So certainly a lot of effectiveness there, and making sure that the economy works in the way it should, that markets are competitive, that the prices that people pay are fair. The president has recently asked the Federal Trade Commission to look into what's happening with oil companies and making sure those prices at the pump that people are paying are fair and competitive prices. So those are a lot of the steps that the president has taken to lower costs for American families. This budget reflects that. We remain concerned about inflation, especially because of this unprovoked invasion by Russia and Ukraine, which is having this effect on energy and gas prices. So the president remains committed there to doing all he can to keep prices low for American families.